third quarter.
Well, those are the headlines that we're tracking for you today on Startup Street. Now, IPO-bound digital financial services platform Mobikwik has reported its first ever full year of profit for FY24, with profit after tax coming in at about 14 crores for the year compared to a loss of 83.8 crores in FY23. It ended the year with a total income of about 890 crore rupees, which is a near 59% increase over the previous year. Mobikwik also reported an EBITDA margin of 4.18% and EBITDA of 37.2 crores for the financial year. For more on these earnings and the roadmap ahead, I'm now joined by Upasana Taku, the co-founder and CFO of Mobikwik. Upasana, welcome to Startup Street. Thanks very much for your time here. You know, a full year of profit after 15 years of operations. Let me just start by asking you what contributed to this, whether this profit momentum will continue going forward, what led to that 62% kind of a rise in operating revenues, and also, we did notice a sharp rise in the lending operational expenses. If you could also explain that.
Firstly, thanks so much for having me on the show today. It's a pleasure to be here. And thanks again for congratulating us on 15 years as a company. I think the important point here is that while we may have achieved full year profitability in financial year 24, I can assure you that this is not something we have achieved in the last 1 year. We have been working towards it for the entire 15 years of our existence, and many a times, choosing to be contrarian to several other players in our sector. What has contributed? Today we have a fairly large user base, more than 150 million users, about 4 million merchants on our platform. And while our original foundation is as a payments company, so our first relationship with all these users and small merchants is as a payments platform, eventually what we have done successfully, as opposed to many other players, is we have figured out how to service these users and merchants on their other financial needs. Because most of India, as you know, is still not in the ambit of financial inclusion. These are people who have bank accounts but are not well served on any financial product, whether it is credit products or savings products or insurance products. And I think what we have done a good job of is to simplify and curate these products in partnerships with the banks, NBFCs and AMCs, and bring them in a very simplified format on our app. So I think the fact that we are able to scale up our user base, merchant base, the fact that we are able to generate revenue in a profitable manner from our main business, which is payments, and also the fact that now, since the last 6 years, we are also able to cross-sell other credit and investment products to our users and our merchants. All of this is coming together. And I should also say that we are a very prudent company. So in the last 1 year, while our revenues have increased 59%, our fixed cost has actually come down from 50% as a percentage of revenue to 39% as a percentage of revenue. And I think all of these factors coming together has helped us generate a healthy profit.
Well, Upasana, then the next question is, what will FY25 look like if you're saying this momentum will continue? And currently, as we understand from your DRHP, the split of the businesses, payments was about 45% of the total revenues, and the rest is from your financial service distribution products. Is that the current mix as well? And what sort of growth do you expect in both?
Yeah, absolutely. In financial year 24 as well, payments contribution to the revenue is about 40%, and 60% continues to be from the distribution of financial products. And if I think of a long-term future, I think both of these verticals in our business will continue to be somewhere in this 50% margin. Sometimes one sector will contribute slightly over 50%, other times another sector. So roughly in the range of 50-55% is going to be the contribution. Now, incidentally, payments continues to be a 1% margin business. And in financial products, you can make higher margins. So therefore, even if you grow substantially in payments, it's very hard to maintain, the same parity, given that financial product distribution is a, more money-making business. And I think if I think about the future, we we aim to bring a larger bouquet of financial products to our users as well as our small merchants. So not just credit products, but also several investment and saving products, as well as we hold an insurance distribution license. The aim is really to become the one app that our users and our small merchants can rely on for all their financial needs.
Yeah. Well, Upasana, we have very little time, so quickly, that IPO issue which you would scale down to 700 crores, what are now the timelines you're working with to go public? Because earlier you said you want to post 3-4 quarters of consecutive profit before you consider that. You posted a full year profit, now what next?
No, absolutely. I think we feel very confident about our performance, and we expect to continue, building, innovating in the fintech sector, bringing more products to the market, and continuing to grow revenue with the same momentum while maintaining at least baseline profitability, just like we have done in this past year. So we feel very
what I was getting at is, what I was getting at is the IPO timeline.
Yes. So I was saying that, I do believe that we are now ready to become a listed company. And you are aware that we have filed for an IPO with the Securities and Exchange Board of India in January of 2024. As I see the SEBI update status on their website, we are currently #1 in the queue of DRHPs which are up for approval. So I am also praying and hoping for an early approval. And we look forward to bringing the company to the public markets as soon as we get the regulators' blessings.
All right, Upasana, and we'll keep a close watch on that. Thank you very much for your time here on CNBC TV 18 today.
Thank you. Thank you so much for having me here.
On the hot seat today, health tech platform